And welcome. This is Mary Ellen McGonagle with your Friday afternoon MEM Edge show, the show where we bring you where the action is in the broader markets. As usual, we're going to take a look at where those broader markets closed, some sector rotation that is shaping up as we head into earnings season, and lots of other very relevant information. So let's get started with some of that economic data that drove price action last week. The broader markets, S&P up about 1%. We did get FOMC meeting notes on Wednesday, and going into that report, the markets were certainly on edge. And those FOMC meeting notes did confirm that the Federal Reserve is still concerned about the labor market. That will be their focus, as we are overall at that time for that meeting seeing inflation recede. However, data as we move through the week, we did get consumer price index. That was on Thursday, and the numbers came in ahead of estimates. So that was a not pleasant surprise for the markets. We are seeing interest rates increase. We'll take a look at that yield on the 10-year. However, today we did get producer price index. That's going to be manufacturing pricing data, and that did show that wholesale prices remain the same. So good news there. That tends to be a precursor for prices down the road. So the markets liked that news. Also, next week, we are going to get retail sales data, industrial production, and then some housing numbers as well. As far as market developments, we will get into the fact that China's market did pull back a bit last week. We are seeing volatility remain elevated. And again, we are going to take a look at that 10-year yield. Let's go ahead and get started with the S&P 500. Here we are with a daily price chart of SPX, and you can see that we are very much in a nice quarterly confirmed uptrend. Again, we were up about 1%. We have that RSI above 50, heading upward, and likewise with that MACD. This past week, we experienced what's called a MACD crossover, and that's that black line up through the red, signaling potentially a new uptrend. And from here, let's go ahead and take a look beneath the surface. We want to be really on top of what's shaping up among these sectors. For a length of time, certainly during August and a bit beyond, we were seeing defensive areas at the forefront, and we are seeing a rotation. Again, we are in the beginning stages of earnings. So let's go ahead and take a look at some of these areas that are now up here at the forefront. This is a 2-month daily price chart view. We've added that relative strength indicator. So your stronger sectors will be up here at the forefront and weaker areas down in this lower quartile. So we're looking up here. First up, we can see industrials front and center. The group was not the top performer, but it certainly had a good day today, up 1.8%. And hopefully we will be able to get to a name or two in that grouping, but it is continuing to expand. Again, with earnings, XLF, this is the financial ETF. We're going to take a look at bank grouping next, but take a look at this sharp breakout that took place today on very big volume. So with XLF, you can see we have that black line up through the red with the financial sector, and we are going to look at a couple of names there. I'll share with you how you can uncover potential candidates in this group. Also up here at the forefront, good to see technology. It had been languishing for quite some time down in that weaker quartile. XLK, top performer this week, up 2.4%. I'll share with you where that strength in tech is emanating from. You will want to be aware of that. Also have a viewer question regarding a software stock, which is one of those stronger areas within technology. Also, energy still up here at the forefront. The group was flat for the week with the receding concern as far as overseas Middle Eastern concerns. We can also see here a pullback in XLE and a nice move beyond that. So there are a few names in this energy sector that are really firming up and looking quite interesting as we move through. Let's take a look at some of these weaker areas. Now, we did get a pullback in utilities. That's XLU last week, the most down for the week, down 2.8%. And you can see we are recovering. I am viewing this pullback as a buying opportunity, and I will most likely be adding new candidates to my MEM Edge report this weekend, having missed some of this move to new highs here. So let's go ahead back, take a look at some of these other sectors that are weak and are potentially may continue to remain weak. And these are defensive areas. We looked at utilities, staples, XLP, down here with a move below that key 50-day, simple moving average, a negative RSI, and a negative MACD. One item of note, I talked about this in my midweek Wednesday MEM Edge report, was the move back into healthcare. Now, normally this is a defensive area of the markets, but there are growthier areas that are on the move higher. We'll get into that as we move through. But very good news here. We see that RSI back above that 50 and a move back above each of these moving averages. So very, very good news there. I did add a name on Wednesday and potentially will be adding more to that sector as we continue to see it firm up. XLRE REITs, these are names and companies, again, because of their high yield, are viewed as defensive. However, they're being held back because interest rates are on the rise. And this particular area, a lot of their work as it relates to expanding their portfolios, ideally, they want a lower interest rate environment. So let's go ahead and take a look beyond these sectors beneath the surface. These are ETFs that I find super valuable as far as staying on top, again, of rotation beyond those sectors. So up here at the forefront, this is TNX, the yield on that 10-year, and you can see we're up here at 4.07. Not the direction we want to see, but today it did level off a bit, so that is good news. We're going to be keeping a close eye on that. So far, we're not seeing a dramatic response except for those REITs, but we are definitely going to want to stay on top of those yields. Up here at the forefront, I talked about software stocks. This is IGV, the tech software ETF, and you can see a very sharp advance. It was up over 3% last week. Definitely a outperformer among tech, and then also within the broader markets. We're looking here at a weekly chart of that IGV. You can see that we've had this nice uptrend, and we did have that black line up through the red early last month and a nice continuation rally. So that's an area I talked about. We'll be checking out some names, also looking at KRE, and that's that regional banking ETF up 3.5% today, all about earnings. Earnings season did begin as it does with these bank stocks. Take a look at that MACD black line up through the red, signaling a new uptrend. Now, to be fair, we've had some head fakes here with this regional banking group. And what you will want to also zone in on are different views of that industry group. So here we are with a view of that weekly chart for the regional banking ETF. Still, again, that volatility very much in place. If we can get that MACD separating and heading further north, we can only need to go back to this late 2020 period, and that type of movement indicating that the momentum has truly come back into play. A move back above this prior high would also confirm. We certainly have many more bank stocks that are due to report next week and beyond. Also moving through these groupings, semiconductors did help that technology area. This is SOXX. The group was up 2% last week. Not overly dynamic. There definitely remains a have and have not component to this semiconductor space where AI chip providers are faring better overall. And then as we move through, I talked about healthcare turning into and moving toward an uptrend. Let's take a look at one group that has a large component in healthcare, and that's biotech stocks, IBB, sharp rally today pushed this RSI back into positive territory. We're not quite in positive territory yet with that MACD, but it certainly is encouraging. A move into biotech stocks does and can signal investor confidence because many of these companies do not have earnings. So you're really buying a story. So also I will share a name in the IBB space. And then also we can see Russell 2000 did experience a nice rally today. As many of you may know, they do have a large percentage of the holdings in this Russell 2000 that are bank stocks. So that's going to give this area a boost as well. Down here in our weaker areas, you will want to be aware, and it has been the case for some time now. This is XRT, the retail ETF for the S&P 500, and you can see that we are languishing here hovering around that 50-day simple moving average. Net, you will need to be very selective in this retail space as far as those areas that are working, because an awful lot are not seeing vibrancy. So from here, let's go ahead and take a look. I mentioned to you that earnings season is alive and well. So what we will do from here is go ahead and take a look at what is called the dashboard for Stockcharts.com. And really quite simply, as we move into earnings season, take a look at this view because it will provide you with the top market performers, and it will of course update throughout the day, and many of these names will either have news related to them or earnings. So we can see Wells Fargo, they did come out with their numbers today, a gap up into a base breakout here at that 60, and then there's that MACD really elevated move that I talked about that indicates nice momentum, and really we need to only look at that volume. So looking and staying on top of this type of list can really be informative. What I'm going to do from here is take a quick look at Uber. Now, this particular company did not report earnings. It has everything to do with Tesla's conference regarding their autonomous vehicles, and they really did not have a lot by way of details for investors, and that was alarming, but viewed as constructive for potentially competitive companies such as Uber. So what I did want to point out to you is when these earnings reports are released, the company comes out with good numbers, whether it's before the market or after the market closed the prior day. Oftentimes you will see this gap up on the open as investors pile into that stock. So for those of you that are super short term in your outlook, we're looking here at UBER at a 15-minute price chart. I want to just highlight a characteristic that tends to really take place here, and that is when you have a stock gap up on the open, if that third bar, and we're looking at a 15-minute in this case, you really can use an hourly or really your choice, but on that 15-minute, we can see that that third bar price closed above the high of that first bar. And net, when you can marry that with heavy volume, we had that MACD crossover and a bullish RSI. Statistically, oftentimes you will see the stock advance higher beyond that. Now, for those that are longer term in nature, you will want to move forward to a broader view. And this is a daily price chart of Uber. And what I wanted to highlight for you is the fact that the stock has broken out of a multi-month base on big volume. Today, we only need to look at that weekly chart to confirm this nice longer term weekly base breakout. Take a look at that MACD crossover and then that elevated move higher on the longer term weekly. Again, that longer term base breakout. So in case you can't guess, the stock is looking quite constructive on any numerous time frame charts. Also, we did want to take a look at some of those software. I did get a question before today's show, and I want to thank that viewer about a particular stock and then a basket of names. And first up is we will take a look at Crowdstrike. That was the stock that was in question, and I actually had it on my list to review already. So we talked about software stocks being on the move higher. Crowdstrike was a big winner for many years. Let's go take a look at a longer term monthly chart. Actually, a weekly would be as telling, and you can see that it's had its superior areas and points of outperformance. The company is in that cybersecurity space. Now, this tumble here at the end of July into the beginning of August has everything to do with a misfire and the company's failing to provide that cybersecurity to companies such as Delta Airlines, which announced a big loss because of their inability to use their computer systems for some time. So we can see this big break. Now, from here, CrowdStrike does appear to be reversing its downtrend. Quite simply, we're back above that 200-day. We're looking at a daily chart now, and you can see your RSI and MACD are heading higher. Now, while the momentum is certainly behind this particular name, for my work, the company definitely has a bit of a cloud over it. When you have this type of price action and dismay from investors that want it out on heavy volume because of a technical issue, it is not going to be really historically the best name. We now have this gap up here, this period that we need to fill before we can trend higher, and it may trade higher. I would suggest looking elsewhere within software. Take a look at some of these other names that are in that software cybersecurity. Analysts are talking very highly about the fact that companies are not going to be reducing their budgets for cybersecurity. It is a needed part of any corporation. So let's take a look at Palo Alto. Now, the stock did have an advance this week. You're not early. I'll go ahead and add the 5-day. But what I did want to do is highlight why Palo Alto, among other cybersecurity stocks, were on the rise this week, and namely a very large Wall Street firm did come out and they began coverage of cybersecurity stocks, and they announced who they felt their winners were and who they thought would not outperform. Palo Alto, for this particular, does have that potential for this Wall Street analyst to really outperform the broader markets. And you can see they took that to heart. We have now a nice base breakout, this move of that MACD into bullish territory. So a name of this stature that is in a group that is on the move higher would hold certainly more interest for me. Also, we can take a look at a couple of other software stocks that are on the move higher with that group move. And again, oftentimes it will be analyst upgrades or a move into a particular sub-industry grouping. This is Atlassian, TEAM, and you can see with this downtrend reversal that took place, nice high volume here, base breakout, and positive RSI and MACD. Now, from here, I did talk about IBB and the potential move. We're not quite in bullish territory totally yet into IBB, but let's take a look at a couple of two examples in that group. Now, Vertex VRTX has been on my report in the past. We've had really tremendous success with this particular stock once it gets going, and the company, among other products, has a non-narcotic pain medication that really took off here. So let's take a look. VRTX is back above that 50-day simple moving average, RSI in positive territory. Now, we do have that MACD black line up through the red. We're not in positive territory yet. So when looking at these downtrend reversals, some of you may be comfortable getting in earlier. For me, I like to see confidence. I'd like to see this move back above these moving averages, similar to what we're seeing here, but also get that RSI in positive territory, similar to here. But the final characteristic that really gives that confidence is getting those shorter term moving averages trending upward, that 5 and 10-day, then your 21, and then these MAVs act as support instead of potential resistance. So one for the radar to keep on your watch list. One other name that we'll look at here in this biotech space. ALNY is another biotech name sitting up here, did not falter quite as much as the biotech group, which is constructive. And then here we are with this potential base breakout. Last up, I mentioned a viewer question, and it was about some of these consumer staple stocks, and in particular, they were tobacco related. So I'm just going to cycle through these three names. First up is MO. That is going to be Altria. And this particular stock, you can see that we are still below this 50-day simple moving average. We do not have a positive RSI, nor do we have that crossover in that MACD that could potentially signal a new uptrend. So as usual, you will want to use historical precedent as your guide. I'm sure it's very tempting in the sense that once this MO did reverse its downtrend back here at the end of April, we had a very lengthy advance, quite bullish. So from here, you can see that the work we need to do is get that RSI up here, get that stock price above these downward trending moving averages, and last up, get that MACD crossover to provide that confidence. Now, I will tell you overall at this time, it is a group that is not in favor. The estimates for these companies are being revised downward, so you will certainly want to note that as well. Let's take a look at one of those other names, Philip Morris, PM, and you will see a lot of the same characteristics. And this is very typical when you go through these various groups. You will see movement in those groups because dynamics relative to revenue growth and so forth will oftentimes impact most of the companies in that group. So here we are with Philip Morris. We had a tremendous advance here from July into September. This pullback very orderly and anticipated, but again, this particular name is a little closer to turning bullish. We're not quite there yet. You'll also want to, again, zoom out, take a look at that weekly chart and the advance here from 90 to 125. We may need a little more time as far as a period of consolidation, but we certainly are moving closer to turning positive with that particular name. And then last up, BTI, and this is British American, a little among the names that we've been reviewing. It is the weakest because you can see that that RSI has quite a bit more work to do before turning positive. And then likewise with that MACD. Now, if you are a long-term investor, and this is something I talk about quite a bit in my MEM Edge report, I will remove stocks from that suggested holdings list. But if that weekly chart is still constructive, I will advise longer-term investors to stay with the stock. And by that, I mean the RSI is still up here in positive territory. So if you are a very long-term investor, you can stay with it, but take note, we are seeing that black line down through the red on the weekly, which is signaling that that strong uptrend for now has receded. I did have one other area I said that I would cover for you. So let's go ahead and do that right now. We are going to go back and take a look at some of these bank stocks and how you can get your arms around names that could be of interest. So we are looking at that sector summary. I'm going to go ahead and click on that. From here, we are going to take a look at the financial sector. And here we are with that move into bank stocks. Now, it may be startling at first. You'll see a lot of companies that are up quite a bit, but these are going to be your smaller companies, 240 million, 8 million, 150 million. I'm not denouncing them, but from my work, I am going to be more interested in those more liquid names, certainly those that are going to be attractive to bigger institutional funds. So I've gone ahead and sorted this by their base as far as their market cap, large. And then from here, take a look at this Stockcharts technical rating. The higher the number, the better as it responds to the chart. So from here, I'm going to share with you two names that are of interest to me. First up here is JP Morgan Chase, JPM. And we can see that the stock did have this nice move higher into a base breakout, and the move of that MACD just getting into positive territory. Nice high volume on today's rally. From here, you will want to examine whether that was earnings related, or are they due? Next week, we have any number of stocks that are due to report their earnings, and you don't want to get caught in that crossfire. East-West Bancorp, EWBC is another name. Quite interesting here. You can see that MACD crossover. So as you can see, for my work, I am focusing on companies that are larger, more liquid. Last up, this is a favorite of mine as far as really being an outpacer once the group gets going. It is Comerica, CMA. The company is due to report their earnings in a week. So next Friday, you will want to know that, but it has a nice yield, 4.6%. So with that, I will leave it. Everyone, have a great rest of the weekend, and I'm going to look for you here again next Friday.